Global stocks still at all-time highs. Crude oil back above $100 a barrel. What will the unemployment report tell us this week about the market, and what comes next for the next leg up? Or are we going to continue something else? Let's get into it. Okay, Clifford, the 25-year trader. Welcome back to another Monday morning futures market open. And last week, we had some definitely significant developments in the markets. We made another all-time high. The S&P is still at 7,200-ish, trying to break that 7,300 level. I personally believe that we're going to get some kind of retest back to these lows, maybe around here, like this level right here at 7139. So that's what I'll be watching for this week. However, the elephant in the room now is still the oil market. And as you see, I mean, this is actually bullish. It broke above resistance right here at 106, 107-ish. So in my opinion, as long as it's still above 100, you might find buyers at support there. But let's take a look at the fundamental economic indicators we have this week really quick here. Okay, back to Forex Factory Monday. So this week we have the Australian dollar interest rate announcements. So anyone who's a Forex trader going to be trading Australian dollar wants to pay attention to that. Jolts, the job openings, 10 a.m. Tuesday morning. That's kind of like the basically the all the different job openings reported, excluding the farming industry. So that definitely will be significant. Whenever you see red, that means it's significant. New home sales, ADP non-farm employment change. That's kind of like the preview there. And then Friday we have the big one, the unemployment rate and the unemployment report, which actually I think last month it did show some strength. So we'll have to see how the labor market is this week, because supposedly the Fed is on hold based on, the labor market and all that. So keep an eye on that as well. So overall, I mean, I think volatility is going to pick up probably Tuesday. Today looks kind of like a slower day, but we'll see how that goes. All right, let's check out the COT this week. So for those who don't know, the commitment of traders is the institutional positioning in the futures market. And even if you're not a futures trader, you should be aware of this because it's basically showing you where the smart money's positioned. And right now they're still short the S&P 500, which is actually a sign that the bull market is probably going to continue, because usually when they're short the S&P futures, stocks continue to move. You kind of want to think of it as a almost like a seesaw effect, like they're short, so you go long. However, if you see them getting really long, you would actually consider going short. That's how this report works. It's released every Friday, but it shows you the data from the institutional positioning from Tuesday. So every Tuesday, the government does the report, but then they release it Friday. So it's kind of like a lag. We are looking at their positions. Right now, they're holding 100,009 100,000 short positions since last Tuesday. So tomorrow they'll do another report check, and then we'll get that data on Friday. That's how it works for those who don't know. On the NASDAQ, they're kind of like neutral. The blue is the large speculators. The yellow is the small speculators, and the red are the commercials. They're kind of like producers and all that, and they call them hedgers. So you really don't need to usually watch the commercials too much. The ones you want to watch are the large spec and the small spec, the blue and the yellow. For those who don't know that. So let's take a look real quick here. So yeah, I think we should get a retest. If you look at support here, this candle, if it holds at 71.50, I would say that's a good long position. I would consider taking a long there at 71.50, maybe putting a stop somewhere underneath support, under this low here, which see how strong support is forming here at 7,077. See, look, that level held 4 times. 1, 2, 3, 4. That's a freaking fortress level right there. It's going to be hard for it to break. But if it hits down there, you might see buyers swoop in quick. So I would say that it's a good long on a pullback. Same thing with the NASDAQ and the Russell for the most part. What else we got? Over to the commodity side real quick. Let's look at their positioning. So here we have oil, right? And as we can see, the oil market, they're still long. So, that's a sign that the bull market could continue for the most part. Um, Supposedly there's a supply glut, but with all of this stuff happening in the Strait and the Middle East, it's causing the spike in prices as we know. How high it will go, no one really knows, but definitely I'll be watching this positioning to keep you guys informed. For anyone who's curious what the smart money's doing, right now they're long 192,000 contracts. You have to watch out if they get overcrowded long, like you see, like maybe like up here, long 750,000 contracts, then you could get a huge move down, but they're nowhere near that now. So I'd say that these longs are just kind of like holding for now. What else we got real quick here? We got gold. Gold, they're kind of, yeah, they trimmed some long. See here, they were more long, 250,000 contracts. Now they're long only 155,000. So they trimmed some of their longs. Um, Gold has a seasonal pattern to actually rally towards the end of the summer. So I'll definitely be watching that. Over to the currency side, we have the euro. I still believe it's bottoming out. Like here's a 1, 2, 3 bottom that I drew on my charts here. Positioning is neutral. So usually, again, if you see them get really short the euro, you want to go long. If you see them get really long the euro, you want to go short. Kind of like the opposite effect. Like here on the pound, see how they were really short the pound? And as you see, it's starting to rise because as they unwind positioning, that causes the market to rise. See here again, they were short the pound. They were really short the pound. So this was a really good buy because they were so overcrowded short the pound that when they started to close these short positions, the market has no choice but to catapult. So so that's how that works. Not a whole. Oh, one last thing, the yen. So last week there was a big move in the yen for those who weren't watching. The it could have supposedly it was a lot of intervention with the Bank of Japan, but this thing rallied hard. I mean, look at this thing. It rallied like a lot. So a lot of analysts are asking, will the rally continue? Well, I believe it will because look how crowded short they are, the yen. I mean, if you're crowded short like that, again, when they start unwinding those shorts, they have no choice but to buy to get out of the market. Think of it as closing the short position, you have to buy to get out. So that causes the market to bounce. Now, if you're trading the yen in the Forex, that would be the dollar yen. So like here, it's the yen futures we're looking at. But this is actually the yen against the dollar, whereas over here, the dollar against the yen. What that means is that if the yen futures is rising, for those who don't know, you want to be short the dollar yen. So if the dollar yen were to pull back, it's kind of like it's a good sell because they're overcrowded short the yen futures. Hope that makes sense. Same thing with the Swiss. You have the Swiss franc and then you have the dollar Swiss, kind of same thing. Swiss against the US dollar, dollar against the Swiss. Over to the grains, not much going on there. I think the grains are really going to move a lot based on the fertilizer problems that are also happening in the Middle East. Um, as oil continues to rise, that's going to put more demand on the grains for anyone who's been following that. Last thing, we got the bond market. I thought the bond market could have been trying to form a little bit of a bottom here. I pointed out on my charts there's a little bit of a 1, 2, 3 bottom here. But again, technicals are only as good as the fundamentals, hold up. And when the Fed said that they're not in any rush to what is it, to cut interest rates, that immediately pushed the bond market lower. For those who don't know that bonds and interest rates, they have an inverse relationship. So if interest rates go, if interest rates go up, bonds go down. If interest rates go down, bonds go up. Kind of like an inverse relationship for those who didn't know that. And I had thought there was a bottoming here because I looked at the positioning on the 10-year bond and look how short they are. So it's definitely, so technically speaking, it's a good bottom because you got overcrowded shorts and you got a 1, 2, 3 bottom on the charts. But when the Fed meeting came out, he didn't indicate anything about interest rate cuts. So that it means that most likely that that there's not going to be a bottom in the bond market until the economy shows signs of struggle. So we'll have to wait to see what the unemployment report says this week. Oh, one last thing for those who trade crypto, I was also watching Bitcoin the other day, and this one here looked like it was bottoming too. But I'm a little skeptical about the Bitcoin bottom because, again, I like to use the COT data, and the COT shows them overcrowded long. In my opinion, you don't want to go long when everyone else is long. Now, again, I could be wrong. I don't have a crystal ball, but I know one thing, and that's you could learn from history. See how when they were crowded longs, the market kind of went down. But look, when they were overcrowded short, the bull market continued. So in my opinion, although it does look like a bottom on the charts, I don't think it's a bottom. For me, I wouldn't buy Bitcoin, me personally, until they start to close some of these long positions on the futures market. That's just my 2 cents. So in summary, yeah, so definitely we'll be watching for the unemployment report this week. I'm looking again for some kind of pullback on the S&P to get long, maybe at about 7150-ish on the ES futures or micro futures, MES, or any other stock index you're trading. And so we'll just have to wait and see what happens with the elephant in the room. That oil, it's still the peace talks, I guess, are out there, but according to technicals, it's closing above resistance, and for me, that's bullish. That could be bearish stocks, at least a pullback. However, if the peace talks do resolve in a good outcome, then yes, I think maybe the oil market will finally pull back to where we need it to get back to normal. Again, it's all up in the air at this point. We'll just have to wait and see what happens, how the situation unfolds. So that's about it for the video. If you like the video, feel free to like, subscribe, put your comments below. Look forward to seeing all of you guys in the next one. And as always, never risk more than 1 to 2% of your account on any given trade, whether you're trading privately or with a prop firm. That is how you will basically survive over the long run. Good luck with your trading this week, guys.